Hello, this is Jordan. This video is being recorded on the early evening of Friday, August 2nd, 2024. Thank you so much for joining me today. And this week, well, very interesting week for precious metals. A lot of mixed action. They sold off to end the week. As the week closed, gold actually gained on the week. I think perhaps as much as 4% if I'm reading that right. Silver was down. GDX was flat. GDXJ was down a little bit, but silver was down 4%, and the gold stocks were down as well, but not as much as the silver stocks. So silver did drag down the silver stocks, and juniors were down. So it was really silver and the silver stocks getting hit hard today. But the macro fundamentals took a big step in gold's direction. So I'm going to talk about that in this week's update. Let's get right to it. Okay, so looking at macro, we're looking at the yield curve. I mean, that's a huge driver of gold, as well as negative real interest rates. And we'll get to negative real interest rates and declining real interest rates in a moment. But first, we have a lot of things on this chart. We have the Fed funds here, one yield curve, another yield curve. This is the 30-year minus the 2-year. This is the 10-year minus the 2-year. This is a stock market. Here's gold. Here's gold against the S&P 500. And I always talk about this, the steepening. You see the inverted yield curve below zero, but it's really the steepening when it goes back up. That's what hurts the market. That's what's really good for gold. As we can see, these lines are marking the steepenings. And of course, the light line here, this was not quite a recession. Okay, this one didn't indicate a recession ever. This was not quite a recession in 19, but because of the COVID crash, we did get a recession. Then we came pretty close in the mid-80s. We can see here in the mid-90s, but no recession. But anyway, enough of the history lesson. The bottom line is look where we are right now. So these are steepening, and they're really close to going above zero. So if they continue to move like this, and they really surge higher, that is going to indicate a recession. Now, if they just go up a little bit, and they kind of don't do much like that, that isn't really a strong indicator of a recession. So the steepening has to continue. And so what that would mean is steepening continues is you get rate cuts, but then long-term rates aren't really falling. Now, they have been. If you look at the last month, recent weeks, both short-term and long-term rates have been coming down. So that's something to keep an eye on when the Fed starts cutting in the coming months. If long-term rates, are they going to continue to go lower, or are they going to kind of stabilize and maybe move up at some point? So that if that happens, that'd be really interesting, really bullish for gold and precious metals. But here's the real key. Look at gold against the S&P 500. Gold really starts to outperform the stock market after the steepening, or when the steepening happens, because these vertical lines, they show the steepening. The first, when it starts to move towards zero, then when it really moves. That's why there's two lines. We can see here again, early 2000s, 2007, of course, here, 2019. Again, not a recession, at least in 2019. But, we come down here, look. When the steepening really began, you can see that's when gold outperformed the stock market. It really started to gain traction. So here, it closed at 0.46. 0.50 is resistance. So if we get some major steepening here, we could see a huge move higher. And again, we get a huge move higher like this, then you're going to see gold. You see a recession and gold go to 4,000 or 5,000 easy in the next few years. I'm saying easy. I know I'm droning on here, but I'm saying easy because that's based on gold really outperforming the stock market big time. Then you get huge rate cuts. So that's the key. Now, let's get into the charts this week. So I'm looking at the spot price of gold from bar chart, because if we look here, you can see here there's a gap. This is based on, you had the contract rollover in gold. And we're in an environment now, unlike the last 15, 20 years when you had 0, 1% rates, we're in an environment where the contract rollover, there's a cost of that. And because of interest rates, and because the gold price is at 2,000, 2,500 and not 300, that's what causes these gaps higher in the chart. So anyway, that's why I'm looking at the spot market, because you don't have that gap. And so this is the daily for the spot. Ugly candle here. So this would be the support I'm looking at right around, 2360 or 2350. This is the 50-day. This is the 100-day. But still, gold came down here, nice bounce off the 50-day. So there's a lot of room for gold. It could come back and test here and hold this level right here. And so who knows if it comes back and consolidates like this for a month or two, then that could give it a better base where then it can make another move higher as the Fed actually begins to cut in September. So this is the support to keep an eye on. Last 2 months, not great candles. So that tells me we're probably going to see more selling next week. Okay, let's look at the weekly. So, based on the daily, I think we're going to see selling next week, as I said. But what's really interesting about the week, this looks really good. This weekly close, this is engulfing all this resistance here. I love this weekly. Again, this is a weekly spot chart. So, I mean, you're seeing, you have good support here just below 2,400. Of course, you have this strong support here at 2,300. Again, this is the spot price. So I really like the weekly candle here. So even if gold comes back for 2 or 3 weeks here and doesn't do anything, as long as it's holding above here, that would be like a bullish correction or bullish consolidation. It could go like this, and then Fed cuts, and you get the next move to 2,500 and higher. Okay, so we're looking at the weekly again. Here you can see the weekly on stock charts, I should say. Here you can see the gap based on the contract rollover. Silver, it's below this. This is resistance now, not the best candle. So, if we see gold sell off a little bit next week, you're probably going to see silver sell off and struggle to recapture this 29 area. So I still think, we can't rule out a move in silver testing, 2640 or so, this strong support here. So silver is still underperforming gold. That's not a good sign. We need that to change. Now, before getting into the stocks, just want to pitch my premium service. You can sign up for it at thedailygold.com/premium. Very affordable. We do a comprehensive weekly update, sometimes flash updates, but we don't want to overburden you with too much information. I do company reports. Last update, I updated a company report on our largest holding. I'm very optimistic on this company. It not only is it undervalued right now based on my analysis, but I see potentially in 4 years this could have 10x potential if we have a real gold bull market and gold goes to 4,000 or 5,000 in that time frame. It's possible the company can get acquired before then, because this is a great company. Sold off last week, performed well this week, only sold off a little bit today. So this is just a sample of what you get in my premium service. And also in the last update, I updated company notes on my top 10 company list. So, and these are all on one page. This is very easy to read. Again, you could sign up, get the last update. You can see what are my top 10 companies, and you can see their notes all on the same page. Really easy to read and digest. So consider my premium service. Would love to have you subscribe. If not, you can continue to enjoy the free weekly updates. Okay, last thing here. Let's talk about the miners. Looking at SILJ here, I don't think it's going to hold this area, so we could see more selling. Look at this support here, just above $10. But for GDX and GDXJ, there's still room that they could fall. I mean, here's GDX. You have this strong support of 33. You have the 200-day, the equivalent 200-day EMA, and then the simple 200-day. So you're coming into really strong support here. Call it 33. So GDX could still drop 10%. That's possible. Again, we're not predicting anything, just assessing the possibilities. So if you get, more selling in silver, a little bit of selling in gold, you could see this come down a little bit. Then you get the rate cut, and maybe it recovers and trends higher like that. Same thing for GDXJ here, just closed below 44. Here's the strong support. Here's the equivalent to the 200-day. So that's a possibility. I'd love to see the market sell off into the rate cuts. Not a big sell-off, but I prefer the market be weak into the rate cuts rather than you get this really strong move into the rate cuts and then it's set up for a big sell-off. So there you go. There it is for the weekly update. A very interesting week. I'll talk more about the macro next week, but it's rough for silver and the silver stocks and some of the junior gold stocks as well. I do think we could get some selling in gold next week, but people, this is really important. The yield curve, if we get that steepening, we're really close to a recession, and we know there's going to be lots of Fed rate cuts. That's all good for gold. That's what we need. We need these positive catalysts that are positive for gold because the stock market and the economy are weakening. That's what we want to see. That will take money out of the market and move it into precious metals and then we get a real bull market. So enough droning on here. Let me know what you think. Leave a comment. Hope you guys have a great weekend, and I'll talk to you guys again next week.